Yeah, no, it's important. Certainly, I didn't predict how much Bitcoin would be influenced by the global macro market meltdown, but I really do think that's an external shock that'll kind of go away, dissipate, and crypto can get back to its fundamentals. And the fundamentals are that, a few years ago, 30 million people used crypto. Now, say 300 million or whatever it is. And honestly, I think it's almost certain that within 5 years, 1 billion people would use crypto. And if 1 billion people are buying Bitcoin and there's still 21 million of them, it's just going to be a higher price, right?
All year, cryptocurrency prices have taken hit after hit as the global macro meltdown worsened. As of press time, Bitcoin, the world's largest cryptocurrency, seems to be recovering from yet another well-dealt macro blow. On Tuesday, the U.S. Bureau of Labor Statistics released the Consumer Price Index report for August, and it was slightly higher than the markets had predicted. The 8.3% headline CPI figure all but sealed the deal for another massive rate hike from the Federal Reserve. The inflation data caused massive price declines in crypto and the U.S. stock market, which lost over $1.6 trillion on Tuesday alone. Bitcoin also plunged below $20,000, raising speculations that it could tumble further. However, after hitting a low of $19,400 on Friday, the crypto asset made a slight recovery to begin the weekend. As of press time, is now back above $20,000, while ETH, the second largest cryptocurrency, is trading at $1,468, its lowest price since July 27. But market experts like Dan Morehead, the founder and CEO of Pantera Capital, are not deeply concerned about the current state of the crypto market. According to Morehead, the fundamentals of the cryptocurrency industry are greater than the setbacks in prices. In a recent interview with the Salt YouTube channel, Morehead discusses the crypto market fundamentals, decentralized finance, and institutional adoption. He especially focuses on Bitcoin, predicting that the number of Bitcoin will soon exceed 1 billion. He adds that with the 21 million supply cap, there is adequate certainty that the crypto asset will grow exponentially in the coming years. We will now take you to Morehead's interview. Please watch, like, and share this video. Also, ensure you subscribe to the channel, drop your comments and observations in the comments section, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
I think that the fundamentals are so strong, it'll push through any kind of global macro issues we've got. And the way I would think about it is, on average, Bitcoin has gone up 2.5x a year for 11 years, right? It's had a really anomalous period of 4 years where we're basically at where we were in 2017. That's probably a really compelling time to get engaged, to get into it. And I do think it'll revert back to its trend. And if we're right, that basically in 10 or 15 years, everybody with their smartphone is going to have Bitcoin or some other cryptocurrency as their payment mechanism, as the way they store their wealth, it's just got to be a much higher price. And that's why I'm still so bullish. Whatever, maybe, 20% of the world maybe or less has exposure to crypto right now, 15% of the world. And I think it's going to be 60 or 70. What you say makes sense. And there's obviously going to be some point in time where the growth rate has to, come back to some kind of more flat line. But there's all kinds of adoption curves of all kinds of other technologies, the telephone, the internet, all that stuff, where it goes, it's an S curve, very slow for a while, goes vertical and then goes slow again. I think we're still in that, given that only 15% of the world is using crypto. We're certainly not at the end of that S curve.
In his interview, Morehead also discusses the importance of institutional investors and factors that would prompt an influx of such big money investors into the space. Morehead notes that the biggest motivator for these investors would be clear regulation for crypto assets. Fortunately, more governments, including the United States government, are getting more involved in crypto regulation. On Friday, the White House released the first ever framework for the responsible developments of digital assets. Though the report does not include clear regulations for the space, it outlines the ways in which the financial services industry should evolve to make borderless transactions easier. It is certainly the next step toward more regulations for cryptocurrencies in the United States. Here is Dan Morehead on crypto regulation and institutional investors.
There's just this kind of ill thought out kind of reticence for people to get engaged in the blockchain industry. And one of the classics when you're talking to a big institution is, well, we can't do it because of compliance reasons. And you're like, I've been doing this for 10 years. I literally don't know what you're talking about. What do you mean by compliance reasons? They're like, well, my compliance department says I can't do it. I'm like, but why do they say that? and no one ever even knows, right? Like I literally don't know what the issue is. It's just another asset. It's like any other three tick, you trade JPY, EUR, BTC, it's the same. And so when you get these massively valuable, massively credentialed entities, like Bank of New York, which didn't Alexander Hamilton found that thing on One Wall Street, right? Like, you can't get older and better than that. And Fidelity's been around for so long, and Abby Johnson's been super involved in Bitcoin since 2014. All those are massive credentializations for our industry, and then that helps all the other people follow, because it's so hard to be the point of a spear, right? It's just so hard to be number one, to be the first one cutting through. But then when these other successful companies are doing something in our space and they realize it's just a normal asset, like there isn't anything special about Bitcoin that makes it super scary. Like it really is just like any other asset. Everyone's going to pile in. So, it's really hard to be the first person into something. It's not that hard to be like the fourth or fifth company into a space. So I really think those are important.
I mean, I can tell you, like in June, I was worried about what's the next shoe to fall, because there were definitely problems that just weren't visible. So I didn't know how to sort of factor them into any kind of analysis. I mean, aside from the macro, which we can't control any of it, but I guess what should we be mindful of, and what are you most worried about?
Yeah, it's a great question. And again, in the midst of some kind of crisis or downdraft, you don't know what the next shoe is to fall. But having seen 35 years of these cycles, there is just some length of time that humans can hold on to a bad position or leverage or capital calls or, margin calls or whatever. And it just feels like after 8 or 9 months of this and kind of the panic selling into, May and June, that we probably saw the worst of it. It's just hard to imagine there's another centralized finance company out there that is, net negative equity that's still holding off their creditors, right? Like, it feels like if there was somebody out there, that was 2.5 months ago, they probably got cleaned out. So I don't really think there's any excess leverage problems. And you've seen it in all the DeFi protocols that did have a lot of leverage on, 60, 70% of their assets washed out, and now they're starting to rebuild. So I don't worry about that. I used to, I'll admit 4, 5, 6 years ago, used to really sweat. Maybe, Bitcoin's not going to work, and, maybe blockchain's a dumb idea or whatever, but, we're way past that. And so all those, and so the regulatory risk is kind of the last one. I really, that's the only thing that ever, like, if this thing really, if we meet again a year from now at this conference and Bitcoin's down, honestly, I think that's really the only culprit that comes to my mind. And, as long as we don't have something weird happen on the regulatory side, I think we're back to that kind of long-term growth of 2.5x a year. So and the easiest way to say it is, in the previous bear markets, like the crypto winter of 2014, I was sweating bullets. Like, I was like, maybe this thing was a dumb idea. I don't know why I put my whole career into this. This is crazy. I have no worries about that now. I think it's like 90% chance Bitcoin's way higher 2 years from now than it is today.
As a crypto investor, what do you think the space needs to get back to November's high, regulation and institutional investors, or a better global macro environment? Please drop your replies as well as your thoughts on Dan Morehead's interview in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications for more crypto-related videos. Thanks for watching.